It's about that time of day again. My name is Joseph. It's Monday evening, March the 20th, 2017. Welcome back to your nightly newsletter. We're covering crude, S&P, gold, euro, and FDAX this evening. Crude is range-bound with a triangle tonight, telling us to fade the edges, sell the high, buy the low, and focus on those failures and the two-try rule tomorrow. The S&P's bearish, trying to finish off a measured move, but one small channel on the chart is telling us that sellers are likely waiting for higher prices on Tuesday. Gold is bullish and trying to retest today's highs, but a short-term wedge on the chart is giving us two big clues that we can't ignore in tomorrow's session. The euro's bearish and trying to retest a measured move tomorrow, but we have two channels in the chart, one of which is telling us to watch for a trap high early in tomorrow's session for the best selling opportunities. And the FDAX is bearish, trying to retest Friday's low, but we're seeing three big clues in the chart tonight telling us to look for higher prices before we sell it lower tomorrow. Boy, we're back after a quadruple witching weekend. We survived last Friday's quad witching, and we have some quite interesting charts to cover in tonight's newsletter. Plenty of reliable trading opportunities setting up for tomorrow, and plenty of learning opportunities in the next half an hour, 45 minutes here on the newsletter. Before we jump in though, I do want to remind you, the only place to watch the full-length version of this newsletter video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link in the description and come over here on the blog at Sideways Markets and watch the full-length version with all 5 markets and all the analysis. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social. Many different ways to follow me on social media throughout the day. I'm always posting important charts and updates and links throughout the day. Download today's charts. Right below tonight's video, you can download all the charts you see me using in tonight's video on your computer for tomorrow. And please don't forget to grab your free pass. If you're not an advanced member here at School of Trade, you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. Grab that free pass in the upper right-hand corner and come join me in the trade room as a guest this week. Right below that, you'll see the frequently asked questions button here. I want to encourage you guys, if you're brand new here to the School of Trade community, make sure you check out the frequently asked questions so you can learn more of the who, what, where, when, and why. Boy, oh boy, we're back in the action. Another big week ahead of us. Hope you guys had a great weekend out there. Man, oh man, lots of great sports on TV. The weather was nice and sunny and warm this weekend. It's going to give us some rain, though, later on this week. We can't escape the rain here in Los Angeles, California this year for some reason. It's been a wet one. Bottom line, though, is we got some work to do here. We got a big week ahead of us, a full week. Really coming out of quadruple witching, we're expecting a lot of volume to come back here this week. Today was a bit of a rocky start. There was a lot of markets that gapped down and then came back and filled that gap. Crude was a strong move lower and took off back to the upside. In fact, most people on Crude were buying today, right, and then selling. So it was a definitely interesting first day back after quadruple witching, right? If you of course, when our trade room, though, we followed it, right, did a very good job with it in the trade room today. Looking forward, though, tomorrow, of course, being the 21st, there isn't a lot on the schedule here for tomorrow that really has any big kind of market moving strength to it. Nothing out of the overnight session here overnight. We go in tomorrow morning, we got some relatively minor news. CPI and the PPI from our good friends in Great Britain. We've got retail sales tomorrow morning at 8:30. I don't expect any of those news reports to really move the needle too much. The bigger news out of this will be the news from Great Britain at 5:30 a.m. They, of course, right, just announced the trigger of Brexit by the end of this month. So we might see a bit of people kind of speculating with that. But, I think the big news, if you're talking about Great Britain, right, I think the big news is going to be that Brexit stuff that we saw, right, come out in the news headlines this morning. Other than that, though, I really don't see a lot of stuff to worry about tomorrow. Nothing in the U.S. session you can see. It's a pretty wide open week here as far as the U.S. session. We're going to get some home sales numbers later on this week. But other than that, though, tomorrow, not a lot on the schedule for you guys to worry about. 5:30 a.m. pretty much being the big news of tomorrow morning. We'll hear from, right, the Bank of Japan tomorrow night. That's about it tomorrow night, though. So not a lot coming out tomorrow on the news calendar. That's always good news for us, though, because we're definitely looking forward to a big, wide open space to work with here tomorrow. Shall we dive in? Roll those sleeves up. Let's get this party started tonight. We got crude, S&P, gold, euro, Of course, we can't forget about the old FDAX, which is looking like a train wreck here today. Let's jump into crude, though. First, crude is range-bound and trading in the middle of a triangle this evening, telling us this market is balanced and to focus on fading the edges of the range tomorrow until we see a successful breakout pullback. The plan for tomorrow is pretty simple. Buy the low, sell the high, avoid the middle of the range, and focus on failures using that two-try rule. Now, boy, like I said earlier, crude oil, one of the many markets that really took off strong here, coming back from quad witching, right? They got their kind of 1, 2.5 legs down, and then by the time we were coming in, right about 8 o'clock into 9 o'clock Eastern time, this market had turned bullish, right? And this thing was punching back higher again. So it definitely was a mover and a shaker here. You can see, of course, now I've got a triangle drawn on the chart. Once we came and made a new high on the day, pretty much this entire move now was pretty much negated. We have a lower high, a higher low. It just doesn't look like this market really knows where it wants to go right now. And I'm not going to try to interpret that or not try to force it. I'm going to trade exactly what I see here on this chart. The most important clue right now, I think, is that triangle. The most important clue here may be the fact that we saw this real strong candle come out here before 11 o'clock this morning. Remember what it looked like, right? That big strong push higher. Well, of course, that got a new high of the day. It pulled all the way back to allow the buyers to get into the lower price, and you can see they kind of gave up on it. So, I think the biggest clue is the fact that this pullback didn't retest that high. If that pullback would have retested that high, that would have put pretty much a stamp of approval on this, right, for the buyers, and it would cause this now to be, right, a strong bull market, and we'd be buying low, right, trying to go back up to those highs or up to that larger measured move. So the fact that they definitely got a chance, right, literally with a big bow on it, right, big opportunity for the buyers to buy low, and you can see they definitely responded to it with price going higher, but yeah, that doesn't look like they were too excited, right? Pulled back, kind of rolled over here. So I definitely got to be careful here being a buyer on this, just because they had all the opportunity they needed, right? And they pretty much squandered it. So with that said, that brings in the lower high. This brings in our higher low, and this of course brings in our triangle. Now triangles are always pretty easy. You want to think of them as trading ranges, right? Think of them as trading ranges. And by the way, this is the 517 contract. I'm not sure if I told you at the beginning, but we have now rolled over to that 517 contract. As we were talking about last week, we were just watching volume. Last Friday was also rolled over to the 517. So when I see a triangle, what I'm now really watching for is ultimately two big things. First is the middle, right? That vertex point. In fact, I should have added that on here. Let me add that on, kind of the middle of that triangle. I mentioned the no trade zone. It's right around that. It's right around that 49 even. Give or take a few ticks there. We'll say 49 even. Let's say. Again, it's don't worry about 1 or 2 ticks on both sides. But that's one thing that triangle tells us. That is, right, it's the middle of that triangle. That will always be a good target. Now, a good target meaning the second piece of this puzzle is go up top, find swings above, go down bottom, find swings below, and that really is where you want to be thinking in terms of the range. Right? Remember I said triangles are basically trading ranges. They're just consolidating. They get narrower. So you want to keep an eye on these prior swings, right? Swing high, swing low, right? These are your bread and butter. What I always remind you guys and gals in the newsletter is that when you find a trading range, your job is to avoid the middle, around that 49, and get price to get outside of this range as far as you can get it, and then see if those, in this case, buyers will fail, so we can sell it back down. Now again, easy target will be at the middle of that triangle, kind of the vertex of that triangle. The other target on that would be the opposite side of that triangle, right? See how you can extend all those trend lines, right? Opposite side of that triangle, right? We call that what? The bow tie, right? We call it the bow tie pattern. We talked about that on one of the newsletters from last week, where you can go back and find it on my blog at Sideways Markets for the bow tie pattern. The bottom line though is, as it goes up, we want to sell it right back down. As it goes down, same thing, right? As it goes down, right? Wait for it, get really overextended. right, and I was going to joke around by saying, right when you think this market's gone too far, that's exactly when you want to be thinking about fading that edge. Now, obviously, we're not going to guess. We're going to wait for, if price goes lower, we're going to wait for those sellers to try and fail and then send it back up, right? So we're not going to guess. We're going to use the 2-try rule. Once, twice, failure, back in. Once, twice, failure, back in. We talk more about ranges, how to define them, right, in the intermediate class, and we talk about trading with ranges inside of the advanced classes. The key is stay away from the middle, focus on failures, and again, right, get it up so we can sell it back down, get it down so we can buy it back up. Now, at what point does this market become a breakout? Well, good question. 1 try, 2 try, if the second try can hold, right? So if we see this market roar higher here, moving average comes over, right? They pull back, they hold the pullback to new highs, done, right? We now can start focusing on following that new direction. The word of the day tomorrow, though, if you're trying to trade a breakout, is strength. That is the word tomorrow. When you see a range breakout, it's going to be violent. The reason why it's violent, the reason why it's such a strong move outside of that range is because, first of all, that's what it will take, right, for range traders to stop trying to fade it. But more importantly, though, whenever we see a range here, remember, you've got sellers here selling high. You've got buyers here buying low. They need to get forced out of their positions. When they're forced, right, to sell out of a long position or buy out of a short position, right, they're going to do so with some explosiveness, right? So price will usually, if it's going to push out of this range, it's going to really, really run strong and then hold that pullback. But again, as the market goes out, right, strong move. That strong move in my book just gives those sellers a better entry price now. Can they hold the pullback? If they can't, we're going to tumble back in, right, back to the middle of that range. Same thing, right? If you go down, if they can hold it, right, then we can start talking about being a trend follower. Now, obviously, we've got some measured moves. These measured moves are simply areas of support below us, right? They're areas of resistance. However, if we get all the way to that measured move tomorrow, up to that 49.67, you can pretty much count on the fact this is a bull market, right? If we make it all the way to that measured move there at 49.67, this is pretty much guaranteed to be a bull market at that point. So it would be one of those situations where we find that trading range and then trap low, right? Trap low. Kind of the old don't chase after it, right? Wait to buy those traps. Don't chase after it, right? We do hold that pullback. All right, we hold the pullback. We're running towards that measured move. Don't chase after it. Wait for price to pull back for you, right? And then buy it, right, from there. One of my favorite ways to do it is again, if it just kind of runs up, just wait patiently here, find a little trap low, right, and buy on that trap, right? That'll always be a much more reliable way to do it. Got to assume that prior day high, right, will also be a magnet as well. But again, make sure you see some good, strong evidence, right? Those buyers have it. And again, make sure you're on the 517 contract right here for crude tomorrow. Let's keep rolling. How about some S&P? The E-mini S&P is bearish and trying to retest today's low, but the sellers overshot the low of this recent bear channel with such conviction that it's likely the bears got their targets in the short term and will now be waiting to sell again at a higher price tomorrow. We'd love to see these prices get above that 72.5 level to incorporate that hidden channel. And if price runs lower, we'll avoid chasing the move lower and look for trap highs to finish off the measured move. Now, this is a really, really good example here. And we're going to see 2 of these tonight of how you can use really, really shorter term channels. Now, I talk about this throughout our trade room every day, but what I want to remind you is a narrower channel, it's usually going to be a whole lot more reliable than a real wide channel. Wide channels are really unreliable because both sides of the market can participate relatively effectively, right? I can be a buyer and a seller and make money with a real wide channel. Does that make sense, right? The buyers can buy on the way higher. The bears can sell on the way lower. The bulls get back in. The bears get back in, right? So everybody's kind of taking turns back and forth. With a real narrow channel here that I have drawn on the lower left-hand corner, in this case, the buyers can't make any money off of that, right? So that's why it's a lot more reliable when you see narrower channels than it is when you see wider channels.